If your aim of investing in the stock market is to benefit from the dividend, or if you are a dividend oriented investor, that is, you only invest for the purposes of dividend payment, then these are some of the strategies that I believe will help you to position yourself as you invest. Okay, number one is only invest in those companies or only buy those company stocks that have a good history of dividend payments, also called the dividend payment kings, the likes of BAT, Safaricom, Stanbic, and so forth and so on. The second strategy you can put in place is proper market timing. Don't wait until a dividend has been declared in order for you to buy that stock. The ideal way is to invest before the announcement of the financial results, or rather before the dividend has been declared, so that before then you can either buy the stock at a lower price as compared to after the dividend has been declared. There's usually a tendency of the stock price going higher because now everybody wants to benefit from the dividend. So the best strategy is buy the stock before the announcement of the financial results, and of course you'll only be able to do that if you have gone through the financials of that company so as to be able to tell if they are likely to pay the dividend. So always remember, the best entry point is always before dividend announcement. The other strategy that you can put in place is balancing the dividend payment and your capital gain. You might find that after the dividend has been announced, the share price will rally higher than what you would have expected or what you would expect to gain from the dividend announcement. And so in that case, it's always advisable to cash in from the capital gain and forgo the dividend. I mean, if maybe you bought X company at 10 bob and after the dividend announcement the same share is going at 15 bob, why would you not sell and benefit from the capital gain other than wait for a dividend, and maybe they would declare a dividend of 1 bob per share? You understand me? The other strategy, which I think depends on your flexibility, is that if maybe the earnings of that company disappoint and they fail to declare dividend, then a short-term strategy for dividend gain might turn up to be a long-term strategy. So let's say, for example, you had anticipated company X to pay dividend, and so you bought its shares before the announcement of the financial results, and it happens that the results disappoint. Then in that case, it would not be advisable for you to sell the shares because now you're disappointed, but rather hold the shares for a longer duration of time as you wait. And finally, always remember that dividend capture isn't about chasing payouts blindly, but it's always about maximizing your overall return while staying disciplined and strategic. If you do not have a CDS account of your own and you love to open one, the link on my profile will help you to open one. Feel free to reach out to me or to DM me if you encounter any challenge in the process of you opening your account. I hope this makes sense. Now that you know, please follow me for more, and happy investing!